over to you, sir.
Thank you so much, Faizan. Good evening, everyone. I'm Anand Krishnan, the CFO at Foods and Inns Limited. Thank you for joining us, and I extend a very warm welcome to all the participants to this historic conference call, the first ever hosted by our company. We have here with us our chairman, Mr. Bhupen Dalal, our managing director, Mr. Milan Dalal, and our CEO, Mr. Mulay Sahab. I hope all of you had the opportunity to go through our published results and the investor notes shared on the stock exchanges. We are extremely thrilled to post a strong set of numbers for Q3 and 9 months of FY23. We would like to highlight that Q3, being a seasonally weak quarter historically, has started showing signs of promise going ahead, majorly because of the shift in the positioning of advertisements of bottled juices by large beverage brands in India, from it being a summer heat quenching drink to a drink that can be had at any point of time in the day. The growth can also be attributed to the launch of newer brands, deeper penetration of the branded player distribution network, launch of sub-brands for rural markets, and electrification of rural India. On the 30th of December 2022, we submitted our first claim under the PLI scheme for the financial year FY22, which is currently being reviewed by the Project Management Agency. In the month of January 2023, we received our first installment of subsidy under the scheme of integrated cold chain and value addition for an amount of rupees 2.11 crores out of a total sum of rupees 8.89 crores. We are also excited to launch our brownfield spray-dried facility and greenfield Tetrareka facility in March of 2023, as well as our second project joint venture Beyond Mango by June of 2023. Last but not the least, our focus remains on delivering high-quality products and capitalizing on new opportunities to create long-term value for all stakeholders by keeping sustainable practices at the core. On that note, I come to the end of the opening remarks and would like to ask the moderator to open the forum for any questions or any suggestions that you all may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, we request you to restrict your questions to a maximum of 3 per participant and then rejoin the queue to ask more questions if time permits. First question is from the line of Niraj Shah from Exemplar Investment. Please go ahead.
Yeah, thanks for the opportunity and congratulations on posting exceptional set of numbers. My first query was regarding our EBITDA margin. If we look at our peers like Exotics, ABC Fruit, and even smaller players like Devraja Group, Tata Foods and all, as also Green Farm and Capricorn, before they both slipped into all their problems. So they all have been operating at double-digit EBITDA margins over last many years, but our margins are always lower than them. So my question was, since mango processing contributes a similar percentage, around 70 to 80% to their top line, except Jain Farm, so what they are doing differently, which we are not able to do, or is it that they sell some premium products or are up the value chain where we are not?
Thank you for your question. So what we focus as a management is with respect to gross margin per kg, absolute gross margin per kg. We do not focus on the EBITDA margins per se. Being a commodity, the prices of the raw material can actually vary, and most of our clients are on a cost-plus basis. So what we focus on, again, is only the absolute gross margin per kg. The product portfolio that we have is not similar to most of the peers that we have already mentioned. We have a few other businesses that we are into, because of which the EBITDA margins might not be comparable. And the margins, whatever you're talking about for Exotic or Devraja, is basically historical margins. If you were to compare that with the current year margins of Foods and Inns, it will definitely not be comparable because of the volatility in commodity prices.
Thank you. Got it. And my second question was regarding claiming of incentives under PLI scheme. So base year for calculation is FY24 plus 4 years till FY25, right? And we had a consolidated revenue of around 385 crores in FY20. And in current FY23, we will most probably be achieving around 800 crore plus revenues. So is it that even if we don't grow our revenues or post slightly negative year-on-year revenues in FY24 and FY25, still we will be eligible for incentives because we satisfy that 10% CAGR requirement over base year, or we need to grow our revenues incrementally year-on-year each year for that?
Okay, good question. So basically, the base year sale is FY19-20 sales, and there is a distinction between the total sales of the company and the eligible food sales under the scheme. So the eligible food sales under the scheme for us was 328 odd crores in FY19-20. So based on that, in the year 26-27, we have to achieve a number of 872 crores as eligible food sales. So if we were to take the current FY22 eligible food sales number out of the total sales number, it stands at around 550 odd crores. So we would have taken care of the next couple of years with respect to the growth, but FY23 has been a higher growth number as compared to FY22. So we would have taken care of number up to around FY26 as such.
Okay, got it. So even in incrementally, if we post slightly negative growth, then it doesn't matter for the incentives to be claimed, right?
Yes, that's right. If we meet the CAGR minimum criteria that is required.
Okay, and lastly, with our current capacities and capex done till March 23 or June 23, what kind of maximum sales volume we can achieve over approximate 90,000 metric ton that we'll be achieving in FY23?
This is Molay Shah, CEO of Food and Limited. Yes, FY23 we are expecting near to around 85 to 90,000 metric ton. The capex what we are ongoing and partly already completed. The major benefits we can see in FY24 and FY25 due to the seasonal nature of the business.
No, I am talking about peak sales that we can achieve out of the capex we have done or we will be doing till June 23. That is 1 lakh metric ton or 1,20,000 metric ton maximum we can do.
So across all our businesses that we are actually talking about in which we have put up capex, I think we can achieve a turnover of around 1,700 to 1,800 odd crores with respect to the capex that we'll be completing by June 23.
Okay, got it. Okay, thank you very much. All the best, and I will join back in the queue.
Thank you so much.
Thank you. The next question is from the line of Devesh Srimali from DS Investment. Please go ahead.
Yeah, hi. Good afternoon and congratulations for a good set of numbers. Partially my questions have been answered. Just the additional part would be if you could help us understand your aspirations in terms of growth and the growth quality. So let's say, if you take FY23 as a base, how do you see ourselves as a company growing up over 3 to 4 years, and what would be the product mix and margin profiles? I'm just looking at more broad range rather than specific number.
Okay. Hi, this is Molay Shah. This is a good question you asked. Growth trajectory, what we are looking into it. As you know, we are predominantly B2B player. Yeah. So, and earlier we are more concentrated on the mango business. Over a period of time, we have diversified ourselves other than mango like guava, papaya, tomato, chili, garlic. We are also focusing on our spray dried powder product, on our frozen products. So on the next few years, we are seeing that major growth comes from the non-mango business without compromising on the mango growth. Mango business is, if I can say, it's a very good path here, and it's in auto mode, you can say. So there will be a normal growth we can expect, but we see huge opportunity on the non-mango business, specifically on the tomato. Due to the geopolitical issue, I think India was earlier much dependent on import, but now is more focusing on tomato processing in India itself, and India requires more than 70,000 metric ton of tomato paste for captive consumption. So considering and the opportunity we are having, we are trying to take advantage on non-mango business, as I say, and we also see a lot of opportunity in the frozen business. Again, most of the export countries who used to take lots of material from China, we are seeing a lot of focus in India and opportunity for Indian frozen products also. So we'd like to take the maximum advantage of all these products. So basically, with the objective that in 4 years' time, we would like to have an equal contribution from mango business and non-mango business. That is our overall strategy.
Just to add, Vinod Dalalia, MD, when he said what are the aspirations, the aspiration would be to have a 100% capacity utilization.
Got it.
Also, Mr. Devesh, with respect to numbers, I don't think we'll be in a position to quantify any of the forward projections because of the restrictions being a little company. I'm sure you'll be aware of that. But with respect to growing the non-mango part of the business, we are completely focused as a management and want to get into more value additive businesses so that our margin profile can actually improve. But having said that, the tailwinds are maximum in the mango business because as you would have read in the newspapers of late, the brand Maza is being taken internationally by Coke. So a lot of tailwinds is what we actually see in mango itself, our core business.
Great. No, thanks a lot. That's a quite detailed answer and quite helpful. Another technical question would be that, if you were to look at India versus export, from current to let's say 3-4 years out when we are able to, fully utilize capacities and all, how do you see India versus export as a mix and how do you see margin profile differences between two?
Overall, I'm all here. Overall, India versus export, in fact, not only for our company, for overall our industry, domestic demand is much higher than export demand. So overall, the contribution from Indian business will be greater than the export business. But we can see good traction from the GCC, that is Gulf region, which may contribute a substantial portion of our export business. So, but India demands quite a huge opportunity, I believe, and India contributes a major part of business in near futures.
Just to elaborate on this point with respect to numbers, up until FY21, 60 to 70% of our revenue used to come from the export markets and around 30 to 40 used to come from the domestic markets as such. But as we speak of FY23 9-month performance, our export sales contributed only 43% of the total revenue, and the domestic sales has contributed to around 57% of the total revenue. So that's how the sales is fungible between domestic and exports, and we take opportunistic calls to sell in the market where the realization is better.
Got it. That's quite helpful. And the last one was connected to your previous answer. I heard that we have about 90,000 metric ton capacity, and after expansion we'll get to 130 or 140. Did I get that right, or?
So we do have that number of expansion, but then there is a proposition wherein we might expand internally depending upon the demands in the market. So we wouldn't like to comment on the capacity because of some competitive restrictions.
Got it. Fair enough, I think. Thanks a lot. I think those were the only question I have, and wish you all the best. Thank you.
Thank you. The next question is from the line of Kapil Ahuja from Logo Fashion Textiles. Please go ahead.
Yeah, congratulations for the good set of numbers and for the successful allotment of franchise allotment. I would like to know regarding this joint venture of Pectin. So, what is the top line that you are going to achieve from this Pectin in financial year 23-24, and what will be the gross margins for it? Because this, I assume that the raw material would be in-house from the mango waste.
Thank you for your question, Mr. Kapil. So, as I told you in the starting part of the call, we might not be able to give you numbers with respect to any parts of the business, basically because it's forward projection. But with respect to the kind of gross margins that we can actually achieve, it's double digit, north of 50% sort of a gross margin, basically because of the in-house raw materials that we are going to be using as such in the Pectin business as such.
Okay. And when can we expect the production to begin?
June of 2023.
June 23. So the pectin, oil and butters, these will be all the three segments, or it will be cumulative one segment?
Only pectin as of now. That's stage 1 for us. So once that project is successful, then we will actually step on to project 2, wherein we'll be making the other CBE, that is cocoa butter equivalent out of it. And then we also want to make pectin out of other fruits and vegetables apart from mango that we are actually planning to do as of now.
Okay. So you'll not be able to give any vague numbers also for the revenue that you'll derive in 23-24? No?
Sure. So what I'll do is that I'll give you a broad number of what the import parity price is. Our capacity is 150 metric tons as of now. It's a easily expandable capacity, but then as of now, that whatever we have put up is 150 metric tons, and the import parity price for pectin is around 1,000 rupees a kg to 1,500 rupees a kg. So you can do the math.
Okay. And so secondly, for the Tetra Recart machinery, so this is on stream?
The machine is already on stream, but the commercial production has not yet started because we are yet to put up the ETP facility in Wankal, which is a greenfield facility as such. So by March, the ETP facility should also be ready and it should commence production.
Okay. So sure, you will be doing just the packaging in this for the third parties, or you will be going for your own a small package for consumers also for mango and guava or pineapple?
It's a hybrid model. We are looking to expand business in retail in our own brand as well.
Okay.
We are also working on the co-packing. So it's a hybrid model.
Okay. So because I've heard that you are doing some testing for Amul also.
I won't be able to comment on this, but we are working with many big brands, and as once the production starts, and I think everything will be by the time people will come to. At this stage, I won't be able to tell much about this.
Thanks. Now, finally, you just told me that there's huge opportunity in tomato processing. So this tomato processing happens 12 around the year, or it happens also like mangoes for some particular season or particular months?
Tomato is a winter crop. In India, tomato for our processing industry is available from mid-October onwards until March. So that is the crop situation.
Okay.
The tomato is good in India. Every year may not be like that. Last year was not so good, but alternate year in agricultural commodities, we have experienced that alternate year always a good year.
Mm-hmm. Okay, and so there was a huge equity dilution of 40%, and so I expect there would be no more equity dilutions?
No, currently no further plans. This is taking care of a pretty mid-term to long-term requirement, and this is anyway in the form of warrants, so we'll get the infusion over tranches within the next 18 months.
Okay. Thank you, sir. Thanks a lot. Best of luck.
Thank you. The next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Yeah, good evening, gentlemen. My warm regards to Bhupen sir. Thanks to see there on the call. So my question, Milan bhai, was to you. Can you please explain us the business in detail about the spread, dried powder, frozen food, and even kusum spices? It will help us to understand the growth trajectory of a company and how company can be looked forward on that perspective.
Yes, Sanjay bhai, thank you. So apart from our pulping division, traditionally, rather this company had initial business 50 years ago in spray drying. It used to do spray drying of egg powder, and after the takeover in the next 5 to 7 years, we had moved into fruit powders. And now the facility from Chembur at Mumbai, where we monetized the land, has now been shifted to Nashik, and we are running it at 100% capacity. We do multiple fruits and vegetables powder, including the latest being honey powder, showing us great potential. With the success of the spray drying unit, we have put up a 100% expansion of our facilities, which is will go on stream by March of this year, giving us, and there is enough order book position to take care of the capacity expansion. Frozen food again has been a business of the company as a joint venture to start with, then as a subsidiary. Now it's a merged entity, and we have done a lot of product mix changes, layout changes, and everything. And then now we have perfected. Apart from doing white label jobs, we are also have just test marketed and launched some products into the domestic market, frozen, and we seem to be seeing a good amount of traction. As far as the spices was concerned, this was an acquisition in the year 2019. It is a 50-year-old brand, and a running ongoing business was available, and we took over. Bit of a kind of drawback thanks to the COVID, but we have come over that hump, and we see a lot of scope from the unorganized sector getting into the organized sector. And though we may be a small player, we have enough scope in slowly and steadily penetrating our presence in multiple markets.
So, sir, it has a huge potential as far as spices are concerned. It is a 40,000 crore market, you yourself have mentioned. So how do we see that? Are we going for a contract manufacturing, or we are going to sell in our own name as a Kusum Spices?
Kusum Spices, currently the plans are to go 100% into our own brand. That gives us a great leverage. The EBITDA margins are higher and doing it. What we are doing a bit of R&D, as we know that the taste buds into different parts of India there are tremendous variations, and we are trying to improvise and have localized SKU, not to unnecessarily increase too many SKU. At the same time, some of the universal SKUs where we would be, other than the pure CPC, that's the chili, turmeric, coriander, where the margins can be a bit thin, but specialized masalas and some innovative products, and we hope to expand our presence slowly and steadily from the city of Mumbai to the western zone. And having also said that, there is a tremendous export potential, and we are now all set. My team just tells me that we now have the US FDA certification in place, and BRC and whatever is required, so we should be now ready to serve the Indian diaspora around the world.
That's great. So can you say something about our brand called Green Top? Can you highlight what is that brand about and what we are doing on that?
Okay, this is Mola Shah. The Green Top, the brand, we are doing a test market in India, more focusing on frozen snacks and frozen vegetables. We have already launched few products in Horeca market as well as GT. Now we are exploring in the modern trade. We are trying to list the product in chain stores, and we hope that so far the traction on the product quite good. We are getting repeated orders, and we need to do a lot of work on this, and we are quite hopeful that over a period of time, a couple of years, we can be a good position with such frozen products in Indian market.
Thank you. It's really helpful. I'll come back in queue if any more questions. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Chokhani from Trade Capital. Please go ahead.
Thank you for organizing this first investor call. I have 2-3 questions. First question is the capex largely done, and are we planning any more capex in the mango pulp business? And any M&A opportunities we're looking for?
Okay. So mostly the capex is actually done, should be done by March of 23. There will be some spillovers which should actually end by June or July of 2023 as such. So this is with respect to the growth that we actually envisage coming in to the business verticals of the company as such. So we won't be able to give you exact numbers with respect to the sales growth with respect to the capex put up or with respect to the quantum as such.
Okay. But broadly, the capex is done.
Yes, that's right.
Okay. The next question is, can you give the PLI incentive breakup for the next 3-4 years, or will it be largely back-ended? And what will be the accounting for this? Will it be shown as other income? So if you can just throw some light on that, please.
Sure. It will be accounted as other income. And the breakup is, the formula is actually available on the scheme document itself, wherein there is a variability based on, the quantum of sales that we actually achieve, whether it is at the base level of 10% CAGR, then the number is something. And the maximum of incentives that we get is at 15% CAGR. So at the number of 15% CAGR, the maximum sum of incentives that we actually get is around 145 to 148 crores as of now.
Basically, yeah, I've seen that. I want to know the breakup of that 145 crore over the next 3-4 years per year. If you can give that.
You just open that schedule and come back. Maybe at that point of time, you can just ask the next question.
Sure. That's helpful. There was other income of 5 crores in December financials, which was TDR related. Can you explain us what was that, please?
Hi, Milan Dalal here. Basically, we had a company land in Chembur, which we monetized about 4 years ago by selling it to Purvanankara, a Bangalore-based real estate developer. Having said that, we had a 1/3 stake in the road abutting the plot entrance, which is now converted as DP Road, in that the 3 co-owners of that road were eligible, converted into TDR, and that each one of them has monetized them, processed it, sold and monetized, and this is approximately 5 crore and 15 lakhs has been the income. 5 crores was taken in last quarter. One agreement remained to be signed, which is being taken in this quarter. So it's a one-time event under the...
Okay.
So Deepak, coming back to the question on incentives, so I don't have the breakup in hand right now. So maybe I can take this question offline with you, and then over a period of time, it's actually ballooning, basically because of the sales growth that actually happens. That's how the incentives are structured. But anyway, you can find this formula in the scheme document, and the base number of eligible sales for us is 328 odd crores.
Understood. So my last question is, you did mention that the mango pulp business, many of the local the brands are going international. So are there any plans to expand our capacity on the mango pulp, or do you think the current capacities are enough for the next 3-4 years?
We don't keep our eyes shut. We are continuously looking the opportunity. As and when appropriate opportunity comes, we definitely encash and try to expand our business.
That's from the M&A side, right, sir?
Not only M&A, on the capacity expansion also. As the market progress based on the market demand, because every year we do a thorough research and analysis on the future couple of years demand on the export as well as domestic market, and based on our outcome, we take a call how to expand our business, what level we should go, and that exercise is an ongoing process. So as of today, it will be very difficult for us to give any answer what type of expansion we are looking, but yes, we are quite open and bullish about the market.
Got it. Just one last question related to the incentive. So is this is a question to Anand. So Anand, in terms of the debt, we have around 200-250 crores right now, and more or less, if we in the best case scenario we'll get 150 crores incentives. So the way I see is largely this might be used to repay the debt. How do you see the debt for the next 2 years? Will it go down? Will it remain? Any thoughts on that?
We are trying to grow the business, and this is a working capital intensive business as such. The idea of raising equity money in the company was also to achieve growth. We see a lot of opportunities, and based on how things pan out in the next couple of years, we might take a call on either reducing debt or chasing growth.
Understood. Thank you so much.
Thank you, sir.
Thank you. The next question is from the line of Avinash Nahata from Param Financial Services. Please go ahead.
Yeah, hi. Am I audible?
Yes, you are.
Okay. Thanks, Anand. Thanks, Malay. Thanks, Milan. Thanks, Bhupenji, for coming on the call. A couple of questions from my side. First of all, the communication on the exchange, the tonnage is 63 and 73 for 9 months. So is it standalone and all put together, consolidated?
Sorry, I didn't quite get your question. Can you repeat?
So there is a mention of 63,000 ton and 73,000 ton at two places. Tonnage sold.
It's on the basis of standalone.
Standalone and console, right?
Yeah.
Okay. So when you say
the number that is being published in the investor note.
Yeah, the investor note carries both the numbers, 63,000 ton and 73,000 tons.
Just give me a second. Let me just open it and
I'll just tell you specifically. So under standalone, you guys have mentioned 63,000 tons, and after post that there is a mention of where there is a table. It shows 70, and similarly for quarter there is 16,200 and 17,000 tons.
Right. So what we are talking about 63,000 tons is the pulp sales tonnage. So we have different businesses, right? One is the pulp business, second is the frozen food business, third is the spray dried business and all. So we have mentioned about the pulp sales in the first part of the investor presentation that we have put up. In the table that you are actually mentioning, the tonnage is based on the total tonnage of the company as such.
So when it reads 73,000 tons, which means 63,000 is the pulp tonnage and 10,000 is everything else put together, right?
That's right.
Okay. So that's one. Okay. The second question is just extrapolating this 73,000 tons into 12 months, anything between 90 to 95,000 tons. So will it be possible to share what kind of capacity we own and what kind of this is done through job work or on a lease basis?
So this is likely a competitive data which we do not want to say on a Concall. So,
or if you can just indicate a broad number, whether 20, 30, 40% or a band, that is what is outsourced.
We don't want to discuss about this on a Concall.
No issues. We'll go ahead. Okay. Second is relating to the PLI. When you're saying the base is 328 crores and the achievable turnover eligibility is 827 crores by 26-27, are there any qualitative filters? This talks just about the CAGR growth. So are there any qualitative, quantitative filters, caveats which comes in the way?
The only other caveat is that we have to complete our capex of 78 odd crores that we had committed under the scheme by March of 2023. And whatever we had committed, the capex has to be commercially operationalized by then. That's the only thing.
78 crores by March 23, which we have already spent.
So we are very close to that number, and we should be able to complete that by March.
Sure. Okay. This question is for Mr. Malay. You spoke about tomato tonnage. You mentioned a number of 60,000 tons. So you were talking about the import number?
No, 60,000 ton India consumption I am talking about.
Okay. And you're saying that out of this consumption, there's a decent amount of imports.
Before pre-COVID, out of it, I should say more than 65% is to be import. Now, import is almost at negligible level, 95 to 98% now India producing, with a lot of capacity expanded in last 3-4 years.
Okay. And give us some sense on, for us, mango is a very steady state thing. So our sourcing of tomato is different from sourcing of mango. So, how far we have penetrated into this, because markets are also, while tomato is a widespread market and mango is still, I mean, it's available, but, I mean, just give us a sense on sourcing of tomato when you have highlighted this tomato tonnage.
Okay, good question. Our frozen business, I'll just give a background. Since 1995, we have started frozen vegetable business. Now, when we are processing vegetable, we compulsorily had to tie up with the farmers and do a proper contract farming. So we are already tying up with farmers. We know them, and we are regularly doing the contract farming from vegetables. With such experience, it is really helpful for us to grow our business in the tomato. So today, tomato basically a contract farming business. If you tie up with the farmers for a proper variety in advance before the crop harvest, then you are in the business. So we are doing the same thing. So there's no issue for us with our horticulturalist team experience. We are able to manage. Only thing we have done, we have expanded our strength and expanded our base in like as you rightly said, we have quite experience in the mango growing. Similarly, we have expanded our strength in the tomato growing region also.
So you are saying that you already used to do dried tomato and you were sourcing tomato as part of that business?
No, not dried tomato. I'm talking about we used to do a lot of frozen vegetables where contract farming is necessary. So with that experience, we have expanded or added a category of raw material of tomato. That's what I'm trying to highlight. So we are already experienced in the contract farming, so we just expanded the scope.
Okay. Anand, back to you. So when we are saying, we understand this is a working capital intensive business. So when we are saying 800-900 crores of turnover all put together, I'm not talking about PLI specific, but all put together. Now, given the new equity infusion we have in our company and the non-mango part of business growing and the geographical diversification from the export side, so what, according to you, will be the working capital drawing on a yearly basis? I mean, utilized working capital for the whole year.
Okay.
Take a number 900 crores or 1,000 crores, whatever. I mean, or in terms of number of days, whatever.
No, that's why this mango, non-mango business mixing is really helping to ease out the working capital requirement. As you know, if you depend on a single product, you have to invest on the working capital during season time, and you need to wait to realize over a period of next 12 months to 15 months. Since we are doing multiple products like guava, papaya, tomato, frozen, which are probably have a lesser working capital period because the movement of the goods is much better than mango products. So realization cycle is much better than the exclusive mango business. So that helping us to ease out the working capital requirement.
Sir, give us some sense of the number as to अगर 900 crores का धंधा होता है 900 crores of business. I mean, what kind of working capital will be utilized for the company? Because we have equity infusion we have, and there are a lot of moving parts in the company now.
So as I told you, it's a 900 crore business. Then ballpark figure I can say you should have around 30% debt working capital requirement. You should have it.
Okay. Thanks. And my last question, and on this pectin plant, Anand, you had mentioned 1,000 से 1,500 रुपए kilo. So this is a 20 crore kind of on a full utilized basis, correct? On a yearly basis.
So as I told you, I've already given you the import parity price on the capacity.
Yeah, I mean 1,000-1,500 what you mentioned for a 150 metric ton. So I'm just clarifying nothing else.
Yeah, 1,000 rupees per kg to 1,500 rupees per kg is what the import parity price is.
Correct. If something comes, I'll come back. Thanks a lot, all of you, for coming on the call. Thanks a lot.
Thank you so much.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yes.
Hello.
Yeah. Yep. So thank you very much, sir, for the opportunity. So first up, I just wanted to understand on the seasonality part. I mean, in our business, what is the kind of seasonality do we see in our business?
Okay. Mango, I'll say you, what are the products you are processing. Like mango is a major product which you are processing. Mango between mid-April to mid-August. This is the mango period. Guava starts from August on and off till January. It's not that throughout the period every day guava available, but there's a spell, some days, 15 days there'll be a gap. Again, it will be available like that. Tomato available from October till March. Throughout the period you'll get it. And other products like papaya, on and off you'll get it between September till March. Chili you'll be getting around January till April. Garlic, ginger, a couple of months in sometime in October, November, like that. Most of the seasons are like that. So each of the products you have a window, say between 30 days to 90 days.
Okay. No, so in terms of quarterly, which are the best quarters, in general?
Just to add up on the seasonality, let us be clear that for our company, we should bifurcate into mango and non-mango. When we are doing mango in that 4 months, there is nothing else that we would take up for any processing, available or not available. But in the non-mango, it definitely makes sense in whatever days, whatever capacities we are fully able to do. As far as the sales is concerned, Anand will give in detail, but generally it's on the basis of the consumption. Traditionally, as it was seen that it was the summer months where the consumption is more, but the whole pattern is changing with it being an all year round aspirational India penetrating into tier 2, tier 3 cities. It's almost becoming a all year round product for which our ingredients are used. And lastly but not the least, people are also becoming quite conscious. Currently, yes, I don't know from times to come, post-COVID, a shift onto more natural products.
Yeah, okay, understood.
Just to, highlight with respect to quarters that has been happening historically, again, the trend is changing, but historically Q4 and Q1 were our strongest quarters, but if you were to see the last 2 years, Q2 has actually exceeded in terms of performance as compared to Q1. So the trend is changing, but historically that was the case, and Q3 was the weakest historically.
Third quarter is the weakest. Okay, fair enough.
Yeah.
I got it. That gives a fair understanding. And my second question is on your, aspiration for next 3 years. I think you mentioned we want to have 100% kind of a capacity utilization, right? And our peak revenue can be post this expansion can be about 1,700 to 1,800 crores. So by FY26, let's say 3 years, that is the revenue level that we would aspire to reach. Maybe 1,700 to 1,800 kind of a revenue.
We will not be in a position to actually guide you with respect to what we will be achieving in the next 2 or 3 years, because that would be like a forward projection that we'll be making. But, we are committed to utilizing our in-house capacities fully and go under observed manufacturing outside in case there is more demand coming through is what you would actually see.
Mm-hmm. Okay. Okay. And what sort of sustainable margin our business can see, on a medium-term basis?
So again, margin, I already explained initially that we are targeting absolute gross margin per kg rather than any gross margin percentage or the EBITDA margin percentage.
Okay. So I might have missed that amount. So what is that gross margin per kg we are looking at?
So it depends from product to product. So Totapuri would have X, Alfonso would have Y, and whatever gets reported in the financial statement is a blend of all the businesses that we actually do. So we wouldn't like to again talk about the gross margin per kg, on a con call because of competitive reasons.
Okay. Okay. That's it from my side, sir. All the very best. Thank you.
Thank you so much.
Thank you. The next question is from the line of Niraj Shah from Exemplar Investment. Go ahead.
Yeah, thanks for the follow-up. Wanted to understand structure of our contract that we enter into with our major customers, mainly in pulp segment. Are they monthly, yearly, or more long-term in nature, wherein yearly offtake of certain amount is guaranteed?
It's all yearly contract. We get an indicative volume before season starts, and during the season period, we finalize the contract, but for supply over a period of 12 to 15 months period. But we also in discussion with few big customers for a long-term contract. The reason is that for a better visibility and clarity on the capacity expansion.
Yeah, that's what I was asking, because, for example, Jain Farms is there. It is giving the contract order book which it is having, like 994 crores and all. So that's what I was asking. It is a long-term nature or like that?
It's all yearly contract. As of today, all yearly contract, but we are trying to, as I told you, we are talking to customers for a more than 1 year contract, you can say. We are trying to talk.
Okay, and do we have a data of contribution of top 5 and top 10 customers to our revenues?
Readily not available.
Okay. And if I look at our per metric ton realization difference between domestic and export segment, in export we are able to sell at an average 50% plus premium as compared to domestic market. So is it a difference in product mix, or are we having, as you said, yearly arrangements in place with domestic majors like Pepsi and Coca-Cola? So we need to sell our produce at lower rates in domestic market?
No, not like that. It's realization depends on holding period. Realization depends on storage temperature. So each contract is little unique on based on their actual requirement. So it may not be a correct statement to have any comparison on that unless we deep down on the contract. So, but more or less, whether it's a domestic or the export, all are having different factors, and then we finalize the price.
Oh, fair enough. Thank you very much.
Okay.
Thank you. The next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
I have a couple of questions. The first one being, the board has approved the incorporation of a wholly owned subsidiary. Can you share some more details on that? Or what is that related to? Is it packing business, Tetra Recart, or something else that you're looking at?
So, currently what you have reading in our disclosure that we want our Kusum Spices, which is a partnership company, Foods owning 99.99%, because that was how the setup was available and under the best advice for a takeover of a partnership company. But being in the corporate world, listed company, it always made sense to make it a corporate entity, and hence we would be starting the brands are anyway owned by Foods Inc. So we propose to get into our spices business, and as and when the opportunities come up with the other condiments, which is where the ingredients are going to be spices and ready-to-eat sauces, etc., with most of our in-house products, we have proposed to set up this 100% subsidiary.
Okay. Second question is for Tetra Recart. The contract, which is exclusive contract, for how long is that? And post that, will you be looking at contract manufacturing for some big FMCG giant?
There is no any contract on this line, but machinery we are owning. So basically the entire technology, which is controlled by Tetra Pak, they have transferred to us for running in India. So initially we'll be running on that. And as I think I have already replied to some other questions on this question, that we are looking in our own brand as well as co-packing. It's a hybrid model. So as we'll see, we'll study the market and take a corrective action as we progress.
Okay. My last question is that one of the KRA is to focus on asset-light model for expansion. So are you looking at some more acquisitions? If at all you're looking at, then which segment are you looking at, and what kind of spends do you anticipate for the same?
We are not exactly able to tell you this reply as of now, but as I told you, we are keep our eyes open. As and when there's opportunity, we are definitely exploring, and which will be in line with our business, and which can give a value addition in our overall company's growth. That's what we are looking for.
Okay, so you'll be looking at some technical tie-up, is it?
Many things. Only able to give a technical tie-up or non-technical strategic. All the options we explore continuously, and if we feel it if we match our expectation or give any value addition in our business system, yes, we are ready to look into it.
Okay, we'll wait for the corporate announcements from your side to the exchanges. Thank you for answering the question. Thanks a lot.
Thank you. The next question is from the line of Arvind Kothari from Niveshaay. Please go ahead.
Hello. For the opportunity, sir, I'm relatively new to this company. I just wanted to understand that the equity infusion that has happened, the capex for that, as you were alluding to, is in the similar product line. So, how going forward you plan to ramp that up, and what kind of sales numbers can we look from full utilization of the capital that you would be deploying?
So again, with respect to sales projection is something that we'll not be in a position to actually give you any details. But with respect to the capex that we have committed under the PLI scheme, which is a public knowledge, is around 78 odd crores. Other CWIP details have already been put up in the annual reports that we have disclosed in FY22.
Got it. And these would be similar margin products or better margin products?
It depends from product to product, but Tetraricart should ideally have a better margin profile than what the mango business has as of today.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Devang Bateja, an individual investor. Please go ahead.
Yes, sir. Congrats on the numbers, sir. So I wanted to understand that while we want to transition to more and more non-mango revenue streams, so what is leading the client to prefer us over other existing players? So is it the scale? Is it a long-standing relation? So anything you could share on this front?
No. So basically, the company has been in operation since 50 plus years. And most of our clients, the larger clients, whether it be Pepsi, Coke, or Unilever, have been with us since more than 20 plus years as such. So the long-standing relationship is an entry barrier to a lot of other smaller unorganized players. And what we are working towards is to get away from the commoditized business by following a lot of these sustainable practices. And we are trying to get top dollar for, each of the products that we actually give to all these larger brands as such under sustainability.
So this request for a new revenue stream is internal, or does it come from clients also in some cases, or is it a mix of both?
It's a mix of both.
Okay. And sir, what makes us enter a new market segment? So like you said, in some cases it would be led by client, but then would it be the ROC or the gross margin that you need, or the scale of opportunity? What makes us enter a new market?
So with respect to new market, are you talking about geographical market or with respect to...
No, sir. So something like guava you mentioned, tomato you mentioned, papaya you mentioned, that kind of thing.
So initially, if you see our business, 4 years ago, 92% of the revenue used to actually come from the product mango. Last year, if you actually see in FY22, we ended that at around 78% from the product mango as total contribution to our sales as such. So the idea is to, mango is the seasonal fruit and is processed only between April to July or August in India. So our factories were good factories during the non-mango season. So to better absorb the fixed overhead cost is what we actually got into the other products. And going forward, we hope to actually establish the other product and gain market share in that as well?
To answer more precisely, Milan Dalalia, basically our processing units where the similar capabilities are there is the products that we go after. We cannot do certain type of products, and obviously we shall not be going after that. But to make the best utilization of the current mango processing units, in which we can do the other products, is what is the concentration in pulse.
Thanks, sir. And sir, you mentioned you have a few brands also in the B2C segment. So, say over the long term, do we want to be a B2B company, or do we have aspirations for a B2C market segment also, or are we just testing the market, how the response is?
We are basically a B2B company, as you rightly said. Our focus will remain in B2B. However, we are looking opportunity in B2C. If you see our spice company, which we bought in 2019, so that is a B2C market. So with our existing product portfolio in frozen category, we are already testing market with the B2C. So we would like to explore in B2C market also, but B2B will be our primary focus definitely.
And sir, in B2C also there would be some understanding with our existing client that we are not going to cannibalize their market, or...
Just one second.
Just one second.
Operator, broadcast.
There's some...
520.
Yeah. Can you repeat? I'm sorry. Extremely sorry.
No, sir, so my question is that in the B2C segment also, do we have some prior understanding with our existing clients that we are not going to cannibalize their existing markets?
We are definitely, there has to be a clear understanding. So we will not be penetrating any B2C market where we are predominantly present in the B2B. So that's very clear.
Right. And sir, historically, if I look at your EBITDA margins, the best EBITDA margins you have done is around 12%. So let's say over the next 4 or 5 years, can we expect to do just aspirationally maybe 14-15% or just more than 12%? If you could
we won't be able to comment on that future projection, but our efforts are all on value-added product for improved profitability. That much you can say. It's basically, in our business, is basically a volume business. If you do more volume, your absorption of overhead is much better, and that's the way you are looking for.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Anand Krishnan for closing comments. Thank you, and over to you, sir.
Thank you very much, Faizan. I hope we have been able to answer most of your questions satisfactorily. This being the very first conference call hosted by our company, we request all of you to be patient and give the management some time to get accustomed to this mode of stakeholder interaction and become more investor friendly. Should you need any further clarifications or would like to know more about the company, please feel free to write to us. Thank you once again. Goodbye.
Thank you. Ladies and gentlemen, on behalf of Foods and Inns Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.